It's almost 11 a.m. in Singapore and Shanghai. Welcome to Bloomberg Markets Asia. I'm Haslinda Amin. Here are the top stories. Taiwan rocked by its strongest earthquake in 25 years and a series of aftershocks. More than 24 buildings collapsed with reports of people trapped and disruption to some factories. We'll have a live update from Taipei. Asian stocks sliding as higher commodities prices and solid U.S. economic data add to bets on higher for longer rates. Brent crude holding near 22-month highs on supply and geopolitical concerns. Plus, we have a great lineup of guests this hour, including a check on global supply chains with the executive director of the Port of Los Angeles, Eugene Soroka. Let's get you to market. Stocks, bonds under a lot of pressure as we speak on speculation. Major central banks will keep rates higher for longer. Markets recalibrating, in particular the Fed's path, meaning data. Fed speak will be scrutinized for clues on whether June remains live for the start of easing. MSCI Asia Pac Index currently down. It's 0.8% at session lows. We have the top story today, of course, Taiwan, the biggest earthquake in 25 years. Market still open, which is in a way a good sign for investors. TAIEX down about 0.7%, but no more than the rest of Asia. Taiwan dollar weaker, but it is a strong dollar story. TSMC, by the way, we're tracking that in particular, down about 1%. It has evacuated some of its workers from chip lines. TSMC, by the way, the main contract chip maker for the likes of Apple, the likes of NVIDIA, and Taiwan is important because it accounts for more than half of the world's laptops, motherboards, network devices as well. Now, elsewhere in China, we're seeing that the stock market there is under pressure. The yuan at 782. We saw a strong fix yet again today. Now, let's get more on the impact of that powerful earthquake. Bloomberg's Adrian Kennedy joins us now from Taipei. Adrian, what's the very latest there?
Good morning, Haslinda. We understand that there's been one fatality from the quake so far, and that seems a blessing given that the magnitude, according to the government, was the strongest in 25 years since a 1999 quake, which killed more than 2,000 people. Now, I would underline that this is a quake which hit Hualien, which is on the east of the island and relatively remote to Taipei and the big manufacturing base on the west. And so that toll may climb. At least 26 buildings, I'm not sure of the scale of these, but some of them may be quite small, have collapsed, we understand. So rescue efforts are underway to try and seek those people who may be trapped. However, within Taipei, which was strongly hit by the quake, with buildings swaying and suspensions to the subway system and some other services, life seems to be back to normal. While we are continuing to get temblors, the stocks are still trading and everything is operating as normal.
Adrian, any sense of the kind of help? Any sense of the kind of help that Taiwan might need? We know that China has volunteered to help in its efforts.
The Taiwan President Tsai Ing-wen has announced that an emergency response office has been set up. She's also said that the Taiwan military will be mobilized to provide any support needed by local governments. But I would underscore that Taiwan is an economy, has a government, an economy, and a corporate and community sectors which are really geared up to deal with catastrophe. It's an island which is prone to earthquakes. It had major earthquakes in 1999, as I mentioned, plus one in 2016, which killed more than 100 people, and it regularly gets hit by typhoons. So it looks like I would expect that all of the measures needing to be undertaken can be undertaken by Taiwan itself. The civil population has regular drills to deal with earthquakes. The military and the corporate sector are also well rehearsed. TSMC and United Microelectronics in evacuating some facilities, they did that as a procedural precautionary response rather than because of any damage. So this is very much an island and economy, a population which quickly clicks into gear when there's an event like this. I don't think it'll need any outside help.
Adrian, there's a sense of comfort, I guess, that the markets are still open. The TAIEX is down, the Taiwan dollar is down, but no more than the rest of Asia. Give us a sense of the sentiment in the market about this earthquake.
I think for those people who are trading in the market, they are very much aware that Taiwan is a relatively resilient economy. It has, great reserves of funding, and it's shown itself consistently able to deal with external shocks, and that's why that's one of the reasons why Taiwan was able to weather the pandemic better than most economies. It's something which traders are mindful of, and I think I would underline that we do need to be mindful of any news which may emerge from the east. If the death toll climbs or there's evidence of significant catastrophic damage, then the sentiment may worsen. But I think in many ways, people are just getting along with their lives and their trading day.
We're getting reports that 56 people have been injured in the earthquake in Taiwan. Adrian, what can we expect in the coming hours?
I think we're going to see the injury toll climb. I am a little concerned that the death toll, which I think at the moment is 1, will climb. In 2016, in the quake that I mentioned earlier, which occurred in southern Taiwan, roughly a little over 100 people, I think about 109 people died in that quake. But more than 100 of those fatalities were in a single building. So I think authorities are going to be very, very careful not to sort of give any sort of all clear as long as they're trying to assess the impact, particularly in remote areas of Hualien.
Bloomberg's Adrian Kennedy in Taipei, we thank you so much for your insights. Let's get you to Japan and get to Tokyo Bureau Chief Isabel Reynolds. She joins us from Tokyo. Isabel, we know that the advisory, all tsunami advisories have been lifted for Japan's Okinawa. Take us through the very latest there.
Right. Well, fortunately, I think Japan has got off relatively lightly with this quake. As you know, it struck very close to Taiwan. And while that is close to the border with Japan, the areas of Japan that are nearby are these very remote islands where you perhaps get a few holiday makers, you get people on vacation, but they're really very sort of lightly populated. And even according to people I've seen on Twitter anyway, on the main island of Okinawa, which is perhaps the nearest kind of large population center, there really wasn't much of a tremor felt there at all. As you note, the tsunami warning has been lifted. So I think at this point, everything looks kind of all clear. Also, the flights have been resumed to Okinawa itself. So in that sense, the vacations are back to normal, I would guess.
But we're also hearing that ANA, Japan Airlines, have redirected the flights. Any updates on that?
Yes, well, as far as I know, the Naha airport has been reopened. So presumably some people have been inconvenienced by delays or perhaps having to go to a different airport. But at this point, I think the transport is back in place into Okinawa and out of Okinawa. I think what else has come out of this is, as you noted, China has offered to provide support to Taiwan. Japan has also, Prime Minister Fumio Kishida, has come out and said that Japan stands ready to provide any support that Taiwan would need. Although Taiwan, as we just noted in that previous conversation with Adrian, can deal with these situations itself, it's very much a kind of diplomatic, a political step to be the first to get in there and to offer support. Japan has always been very grateful to Taiwan, for example, for being the first government to come forward in the 2011 quake and the tsunami and offer its support. So those kind of gestures of friendship are very important among these countries that share this common danger.
Isabel, thank you so much for that. Our Tokyo Bureau Chief, Isabel Reynolds, and subscribers can also turn to the Bloomberg for more on this story. Go to TLive Go to get commentary and analysis from Bloomberg's expert editors. Well, still ahead this hour, we speak to the Port of Los Angeles about its growth strategy as it weighs the impact of the Baltimore bridge collapse. Plus, Kotak Mahindra Bank will join us with insights on India's credit market. But first, market analysis with OCBC. Hear why they're expecting the yen to consolidate near recent lows and where they see the line in the sand for intervention. That's next. Keep it here with us. This is Bloomberg. Welcome back. Markets obviously recalibrating higher for longer on the back of better than expected data out of the US suggesting the economy is pretty resilient. Take a look where we are in terms of yields hitting the highest levels this year. That's for 10-year yields, topping the key level of 435. In Asia, yields also higher, tracking the US as we speak. Take a look where we are in terms of US futures and how they're pointing in terms of how the US will play when it's back in the market, pointing to a low open. S&P futures down 0.1%, losses too for the NASDAQ and Dow Jones futures. Let's get perspective on the Fed from Selena Ling, as well as who is chief economist at OCBC, as well as Bloomberg opinion columnist Dan Moss. Selena, first to you. Markets seem to be taking economic good news as bad news.
Well, I think if you look at the US economic exceptionalism narrative, that has really had legs to run. You know, we expected a slowdown happening in the first half of this year. That timeline seems to be pushed out. We have had a string of very strong economic data coming out from the US. So even though we had Fed Chair Powell and a couple of other Fed speakers like Meister, basically essentially singing the same tune. They are saying that there will be rate cuts to come. It's just that there's no urgency yet. So markets kind of like looking past, you know, the Fed talk and thinking that, oh, what if the Fed doesn't really cut rates this year? I think that's going to throw a big spanner into the big risk rally that we've seen for a lot of risk assets this year.
And what if the Fed is actually behind the curve? What if the Fed gets surprised by economic data, which turns for the worse?
Well, I think there is a big risk of that happening. I mean, that's one of the key risks that we see in terms of the very benign scenario of a global soft landing scenario. I think the issue is that actually we still have a couple more of the inflation prints coming out from the US before the June FOMC itself. No one's really expecting anything to happen in May itself. And I think the base effects from last year, you are going to see quite a big drop in terms of the US inflation numbers. Effectively, I think that would open the door for the Fed to cut rates come June.
And Dan, good news is good news. We should be celebrating and not be depressed, despite the fact that perhaps the Fed needs to delay its first rate cut.
Yeah, there's a surplus of long faces, and it's almost a myopic view because it's focused primarily on the reaction to that ISM number. Cast your eyes beyond the United States, as important as that is, and you'll see some key global bellwethers starting to crank up. We've had some very strong export figures from South Korea. That is a vital node in the global supply chain. And we're also seeing some suggestion that activity has bottomed in China. The question is, are people really noticing? Have they become so thoroughly bearish on China that signs of a turn get discounted? Now, I agree with Selena. There's no suggestion, nor should there be, of panic at the Fed. Jay Powell's made it very clear they don't have to rush. The other thing which keeps being overlooked at is he has said a couple of times we are well into restrictive territory. Not just restrictive, but well into, which means policy can still be fairly tight even if they ease up a bit.
But this is a market that wants to keep believing that the rate cuts are coming, right? I mean, we've seen expectations go from 7 to 3, and perhaps even 2 now, and yet we're seeing S&P at close to record highs.
Yeah, so I think there is a couple of things that are driving. I mean, you look at the yield story. The longer the Fed stays at peak rates, that's going to favor the dollar, right? And so far, if you look around outside of the US, things look pretty soft at the moment. It's really only the US that is outperforming. And as long as that story continues in the interim, where would you put your money? I think it's quite a logical conclusion. People will still be looking towards dollar. People will still be looking towards the US equity markets. But that's as long as the Fed sticks to its guns and say that rate cuts are coming.
What are you betting on? Where are 10-year yields headed? 435 right now.
Well, I think we are looking for a steeper curve. The 10-year yield is very much a reaction to, you know, where the real rates are. And as you said, Powell believes that we are well into restrictive territory. So if you look at the break-evens, you know, essentially at 2+%, it's still fairly restrictive. Even if they lower the rate a little bit, the Fed funds futures rate, it really doesn't move the dial that much. So I think the story really has to continue that not only will they just start to cut, but there will be a series of cuts that will be forthcoming second half of the year and going into 2025 itself.
The thing is, what's moving the dial down is the strong dollar story. We've seen how Indonesia has had to intervene, prop up the currency. The talk now is that Bank Indonesia may actually hike rates.
Well, Indonesia has been very sensitive to levels of rupiah, really going back to the 1997-1998 period. And, you know, BI has some form in this regard. There was what looked like a one-off out-of-cycle hike late last year. Look, I think this is all seeming a bit premature. The Fed leadership, keep your eye on the Troika or the triumvirate. Jay Powell, Jefferson, the vice chair, and Williams, the New York Fed. The rest, I won't say they don't matter, but they're of secondary significance. Their message really hasn't changed. It's just not going to be a 2008 style rate cut cycle. It's not going to be a 2020 style, God help us. It's going to resemble something more like the mid-1990s, where there are a couple of mid-course recalibrations. I think that story's still intact, and they don't have to rush.
What does it mean for Asian markets? Higher for longer, which means that central banks in this part of the world also have to wait. They were ready to cut. What are the implications? How best to play such a scenario?
Well, it's going to be very tricky. We've already seen, in recent periods, basically the volatility that's playing through in the currency markets. Dollar Asian FX generally trading on the higher end of the range that we've seen so far. So on top of the intervention, that Dan talked about, essentially to try and smooth out all the volatilities, the window for them to cut rates is closing, I would say, or at least they will have to delay and wait until the Fed and the ECB and all pulls the trigger. So it's a tricky period because growth is a little bit bumpy. In fact, some of the first quarter growth numbers we come in may actually, I think, be a little bit mixed, except maybe with the exception of China, because China's policy stimulus has been ramping up. So we're actually quite hopeful that first quarter GDP growth could come in quite close to the 5% target that they have set. But for the rest of Asia, I think one key canary in our mind that we will be watching for will be next week when Singapore announces its GDP number for first quarter. Because there's so much hope that's being put in, to concert booms that will help the sector, for hospitality, for entertainment, etc. Will that be able to give that big lift to the Singapore economy? And if it doesn't, then are we still looking at a fairly tepid growth pace, of around 2% or less? I think the issue here really is that Asian central banks cannot put down their guard because as long as the dollar keeps going, yields remain high in the US, there will still be pressure on Asian FX. And the weakness that we see in the CNY and also Japanese yen is adding to that pressure.
So how low can they go in terms of the yen, in terms of the yuan? Because both, I guess in a way, more the PBOC, it's been supporting the currency with its fixings every single day. We've seen massive fixing, to the tune of 1,400 pips sometimes. Where do you see the two currencies headed?
Well, for the PBOC, I think they will continue to try and hold the line as far as the fixing is concerned. So that will kind of dampen, I think, over time, some of the speculation that, they are gradually letting the CNY go. Well, the BOJ is a completely different story because the jawboning has stepped up. And actually, if we look a little bit longer, we do expect that the BOJ possibly will still go for policy normalization, meaning that they could possibly even hike rates another 10 basis points. And effectively, they are doing passive QT already, right? They are going to lower the amount that they buy of JGBs. So gradually, as yields rise, I think that will narrow the differential between the dollar and the Japanese yen. But is it enough to reverse the overall trend? I think short term, I think people still have a lot of queries.
It's also about geopolitics. We've had Joe Biden and Xi Jinping talking TikTok. How are you parsing through that meeting?
Well, I think the pressure definitely is on, with regards to TikTok. But I think what will be interesting because Yellen is going to make a trip down to China, soon. And on her agenda, she's talking about China's industrial overcapacity. So I think we still expect that there's still going to be a lot of pressure for China to address some of these issues that the US administration feels are very, very important. Industrial policy sounds like a little bit of an overreach, actually. So the question is whether you're going to get any agreement points between the two big powers, or is it just going to be a talk fest and then market kind of like moves on from there? I think we still really have to wait and see.
And then geopolitics can, of course, hamper those growth that you've been talking about.
Sure, it can, but I wouldn't expect too much in the way of market-moving material from any Biden-Xi calls. The whole purpose of the call is to tamp things down, keep things moving along. Tensions are going to still be there. The idea is that the tensions don't become explosive. And by the way, it's time we started seeing the dollar as a geopolitical asset for the United States.
That's right. Bloomberg opinion columnist Denmark, Selena Ling of OCBC, we thank you so much for your insights today. Now, an update on the earthquake near Taiwan. This is the worst earthquake in 25 years, 7.4 in magnitude. At least 26 buildings have collapsed. Tsunami warnings, by the way, have now been downgraded, but aftershocks are still persisting as we speak. China, highly concerned about the earthquake, is willing to offer Taiwan disaster relief assistance, according to the Chinese government office that handles matters related to Taiwan. Of course, we'll bring you the very latest. At this point in time, at least 56 people injured from that earthquake. Plenty more ahead. Keep it here with us. This is Bloomberg. Now to some top corporate stories we're tracking. Country Garden has revealed that its home sales for March plunged 83% on year to $590 million. That follows an 85% annual slide in February. The sales drought worsens the cash crunch for the company that's already facing a wind-up petition. Country Garden also said last week it would miss its annual reporting deadline. Intel says its manufacturing operation losses have deepened and the business may not reach a break-even point for several years. Intel Foundry, a new division of the company responsible for manufacturing, had sales of nearly $19 billion in 2023, down from $28 billion the previous year. The company's shares fell in extended trading after disclosing the numbers. The U.S. is said to be asking South Korea to adopt restrictions on chip technology exports to China, in line with Washington's control. Sources say officials want Seoul to tighten the flow of technology used for making high-end logic and memory chips. The U.S. reportedly discussed the topic in depth with Korea's president in March, but Seoul is still debating the request as China is a key trading partner. In the markets, we're tracking TSMC, UMC, as well as other chip stocks on the back of that earthquake that hit Taiwan, the worst earthquake in 25 years. Reaction has been pretty muted in the markets. Taiwan Semiconductor down 0.9%, extending its loss for the day. UMC also in negative territory, though we gotta tell you that the losses are pretty much in line with what we're seeing in the market. We're tracking Tesla-related shares on the back of Tesla suffering its first year-over-year sales drop since the early days of COVID pandemic. It sold 386 EVs in the first 3 months of 2024, falling short of analyst average. BYD currently down by 2.5%. Xiaomi currently down by 3.5% after surging almost 15% yesterday. Plenty more ahead. This is Bloomberg. Welcome back. China markets just heading to lunch, and the CSI 300 index in negative territory, down 0.3%, pretty much in line with the rest of the region, under pressure as investors mull over what the Fed may do on the back of higher than expected data out of the U.S. Of course, for China in particular, investors are waiting to see that stimulus that may help to prop up the market. CSI 300 index under pressure. Shanghai Com also down 0.3%. Now, this is the currency we're watching. The yuan under pressure. 723.45 is the level that we're looking at, despite the fact that we saw a very strong fix yet again, 1,300 pips versus what was estimated. It is a currency that is struggling to gain some strength. Now, we're also keeping an eye on the Nikkei 225 as it comes back from lunch. Of course, it is about the yen also in focus, 151 and change. The question is really when we might see intervention from the BOJ. It sees in terms of where it is headed, 152 is a level that we saw intervention the last time, but some say This time around, it could be 155. Bank of America weighing on where it sees the yen headed. It says that the yen may plunge to 160 per dollar if the Fed does not cut soon enough. Take a look at where we are in terms of the yen right now, 151 and change. Now, on the back of that, we're also keeping an eye on the earthquake near Taiwan. The latest on that, of course, this is the worst earthquake in 25 years. We're keeping an eye on the likes of TSMC, that chip maker. It has said that it has evacuated some of its employees, and some operations have been stalled just as a preventive measure. At least 26 buildings have collapsed on the island. Tsunami warnings now downgraded along China as well as the Taiwan coast. And we're also getting a response from Micron. It says that it is evaluating operations in Taiwan after that quake. Now, let's get insights. Joining us now, Bloomberg Intelligence Senior Analyst Robert Lee. Rob, how are you assessing? Perhaps it is too early to perhaps talk about supply chain disruptions when it comes to TSMC, but what is your initial reaction?
Yes, that's right. I mean, the obvious first concern is for the local population, and I guess sort of somewhat fortuitously, this earthquake has happened around 20 kilometres south of Hualien on the east coast, which is a beautiful tourist destination, whereas the majority of the population of Taiwan lives on the opposite coast, on the west. So that should mitigate some potential fallout from this awful event. But in terms of the supply chain in TSMC, similarly, most of TSMC's, in fact, all their fabs are on the west coast of the country. So again, they're somewhat geographically distant from the epicenter of the quake itself. And again, that will help to mitigate potential fallout from this event. But just to add one other thing, Taiwan is on the ring of fire, so earthquakes, maybe not to this magnitude, but they're a relatively frequent occurrence. And TSMC and its peers have very well thought out and well planned protocols which involved shutting down production almost instantaneously, evacuating plants, whatever, to ensure the safety of their employees. And things, from what we can see at the moment, seem to have worked fairly seamlessly on that front. So I guess the answer to your question is, again, it's a little bit early to say, but given that the fabs are geographically distant from the epicenter, given there are well planned and well thought through protocols in place, that should mitigate the impact. And I think the conclusion is that whilst there could be some disruption, it's unlikely to be overly significant. That would be my initial view at this point in time.
Rob, if there is a disruption for any reason at all, is the world ready for it? I mean, have we seen this before? Bearing in mind that TSMC is a major player for the likes of NVIDIA as well as Apple.
No, absolutely right. And, you know, tying into the geopolitical situation at the moment, Taiwan is the Silicon Valley of Asia. It's epicenter in perhaps that's not the right word to use, but it's the center of chip production for Asia, you know, alongside places like South Korea and obviously in mainland China, sort of coming up the ranks on that front. So, again, it sort of highlights the risks, given that world chip production is so reliant on the output from one single island. But as I said, the risks are mitigated, it would appear this time, given that the epicenter of this earthquake is some geographical distance. So I think there is scope for disruption. Again, just taking a step back, I focus a lot on the fabs and state-of-the-art and all the earthquake procedures in there. But what if people can't get to work? What if the trains aren't working? What if the roads are disrupted? It remains to be seen on that front. So I think there could be a knock-on effect in the coming days. But, you know, let's hope, and it looks likely that the risk of a significant impact to their business is probably reasonably low at this point. I think that is a reasonable view to take based on the information we know so far.
Rob, great insights. Bloomberg Intelligence Senior Analyst Robert Lee. Now, here are some top geopolitical stories we're following. President Biden and his Chinese counterpart, Xi Jinping, have spoken by phone in their first one-on-one communication since November. The two leaders discussed AI risks, the Russia-Ukraine war, and efforts to fight drug trafficking. The White House also says the push for TikTok's divestment was raised, although China made no mention of the issue. The talks come ahead of U.S. Treasury Secretary Janet Yellen's visit to China this week. President Biden says Israel has not done enough to protect civilians in Gaza after airstrikes killed 7 aid workers. Among the dead are British, Australian, Polish and Canadian-American volunteers with the World Central Kitchen charity. Israeli Prime Minister Benjamin Netanyahu admitted what he called an unintended strike on innocent people. It's prompted several charities to suspend food deliveries to Palestinians, who the UN and EU say are on the brink of starvation. North Korean state media says leader Kim Jong-un oversaw the test on Tuesday of a new ballistic missile that it claims can deliver a nuclear payload. State media showed pictures of Kim near what it says is a Hwasong-16B missile capable of deploying a hypersonic glide vehicle. The weapon was described as intermediate range, meaning it could hit U.S. military bases in the region. And now to global supply chain worries. The bridge collapse that closed the port of Baltimore to ship traffic is creating logistics headaches, but experts believe it's unlikely to trigger a major new U.S. supply chain crisis as competing neighboring ports are poised to handle more cargo. Let's discuss this and more with Eugene Soroka, Executive Director at the Port of Los Angeles, the busiest container port in North America. Gene, welcome back to the city. Good to have you here with us.
Good morning, Haslinda.
Talk to us about the impact of that Baltimore bridge collapse.
Well, 3 big areas. Number one, our concern for the families of those who lost their lives, and also the workers. It's going to take some time to clean up that bridge and the debris, get the port back in operation. Those workers and the businesses surrounding the port will find challenging times ahead. And thirdly, then, how do we keep that supply chain moving? Can other ports step up and help with some of the cargo? There will be disruptions and there will be changes to the supply chain, but this will be a federal response in the United States. As President Biden has said, followed by Secretary Pete Buttigieg of the Department of Transportation, an all-out effort for cleanup and to build that bridge back up.
So what are some of the lessons learned? Is it about investing more in the maritime infrastructure in the U.S.?
I think, number one, safety and security must be front of mind every day for all of us. In Los Angeles, while we do that daily, we took a top-to-bottom approach with our head of public safety, Tom Gazy, following this terrible incident. I think, second, the building through the bipartisan infrastructure law, the Inflation Reduction Act, and now coming up on the Clean Ports grants and programs, we've got to keep pushing money and investment, both public and private sector, into our infrastructure and supply chain. This is years and decades in the making, and we've got to continue this, not just one snapshot in time.
But in terms of port infrastructure, have they kept up with developments in perhaps modern container vessels? What are your own thoughts on that?
Well, the container vessels have grown so fast in our industry. In Los Angeles, we've now accepted the 23,000 20-foot equivalent unit ships that are commonplace here in Asia and Europe. Being able to make sure that we have the great workforce that's trained to move that container off the ship and onto trucks and rail, key. Grade separations, density of those rail tracks, and more warehousing across the country.
Gene, we know that for you, you've had a great start to the year. Port of LA has done really well. Give us a sense of what you saw in March and whether, the kind of pace that you're seeing in terms of growth is sustainable going forward.
I believe it is, because last year was an odd one for many reasons. Number one, inventories across the nation were so full, we saw a pullback on imports. We also had trouble because cargo shifted away from us due to a protracted labor negotiation with our dock workers. That is complete now, and we've got 5 years of contract peace in front of us. So the cargo that's moving now keeps us at about 75 to 80% of capacity. There's still room to grow.
And China, of course, a big exporter through the Port of LA. What are you seeing in terms of demand?
That's right. The demand starts with the U.S. consumer. And all of those statistics look very strong. The purchase orders, which are usually 90 to 120 days ahead of shipment from Asia, also look strong. I'm very encouraged.
Countries of origin for the cargo that you're seeing, has there been a shift?
Yes. China was 57% of our business in 2022, dropped to 53%. And in the years ahead, I see that settling in the mid-40s, although a dominant trading partner. I'm here this week in Singapore with the BNSF Railway and Steve Bob to talk about not only bringing more cargo to the west coast of the United States, but more cargo that's going to be moved intermodally and by rail. Vietnam is our next stop to Ho Chi Minh City tomorrow. We'll be sharing that information as well with customers and colleagues alike.
What are the biggest risks for the Port of LA as well as the sector as a whole?
Yeah, I think number one, we have to keep up with the infrastructure, not only the brick and mortar, but the digital infrastructure. And just yesterday, LA City Council passed an item that will allow us to have a truck reservation system for the first time across the Port of LA. We've got to keep going on cybersecurity. We stopped 750 million intrusion attempts last year, and the bad guys are still out there. We've got to stay steps ahead.
For the Port of LA, you're seeing Costco, China's Costco, building a big container port nearby, I think to the south in Peru. How are you assessing the impact of that and how that might change trade?
It'll be interesting. While our strength is in the trans-Pacific market, as you know, we do a lot of business on perishable commodities, fruit and vegetables from the west coast of South America. We believe that this is going to boost trade capabilities in the area.
Earlier you talked about how that could be a risk. I'm just wondering, in terms of geopolitics, what's happening in the Red Sea, for instance, do you see that impacting your business in any way?
Absolutely. The concerns in the Red Sea from safety and security remind me of my days based in Dubai when we were dealing with the Somali pirates. Cargo owners are telling me that they're shifting 2, 3, 5% of their business away from that area. It doesn't help in totality because that is the lifeline link for Europe to the Asia manufacturing line. On the Panama Canal side, there's drought issues and more cargo moving by the West Coast, and an East Coast labor negotiation that's taking place now with a deadline of May 17th. All of this is additive to the volume that is coming through Los Angeles.
Jean, we've been talking about the earthquake in Taiwan, the biggest in 25 years. Might that impact trade?
Our thoughts and prayers go to the people on the east coast of Taiwan right now. But as Bob just said on the interview, realistically, with ports of Kaohsiung and Keelung both look operable right now, and the population center in Taipei appears to be safe, we'll be watching this very closely.
And of course, it is also about oil. We have our oil prices surging at this point in time, close to $90 a barrel. I mean, how do you see that may impact sentiment in the market? How might it impact the business for you?
Another big variable in the equations. Number one, bunker prices will be higher, more costly for those who import and export. Number two, decisions will be made based on those higher costs. Where to buy. Interest rates have not dropped yet, and a lot of coverage here on Bloomberg this morning about that topic as well. And inflation stubbornly is sticking around, although dropped just a little bit. That core inflation number at 2.8% last month is encouraging.
Okay, this may not be a question for you, but I'm sure you track it very closely. When do you see the Fed cutting rates?
It doesn't look before June at this point in time. And again, will that mean a rush to buy new inventories if we start seeing cuts, or is that consistent flow going to remain the constant right now? That appears to be the question at hand for many of us.
Well, Jean, great to have you with us today. Jean Soroka, Executive Director at Port of LA. Still to come, India's credit growth is expected to moderate this year. Kotak Mahindra Bank joins us to discuss the implications next. Keep it here with us. This is Bloomberg. Welcome back. Let's do a check on Indian markets as it kicks off its trading day. Benchmarks under pressure in line with the rest of the region. Sensex down almost 0.4%. The other benchmarks also in negative territory. Nifty Bank Index down 0.3%. We continue to track currencies on the back of that strong dollar story. The rupee at 83.37, pretty resilient, flat versus the greenback. Now, India's shadow lenders are bracing for higher bond borrowing costs as banks reduce lending to the sector. Kotak Mahindra Bank is predicting that borrowing costs for financiers may climb as much as 30 basis points. Let's bring in Sujata Guhatha-Kurta, President of Debt Capital Markets at Kotak Mahindra Bank, which was India's fifth biggest arranger for rupee notes last financial year. Sujata, good to have you with us. The reasons behind your predictions here for finances to climb as much as 30 basis points.
Hi, good morning, and thank you for having me on the show. See, what has happened in India, we have the corporate bond spreads at an all-time low of 30 to 40 basis points. So typically, if you see our spreads over the govies is usually 75 to 80 basis points. But this year, because of lower supply and bullishness, people are taking positions ahead of the expected cuts from our Reserve Bank of India, ahead of the inclusion of Indian bonds into the JP Morgan index. So there's been a lot of buying, which has been, spurring these, events that are yet to come. As a result, the corporate bond spreads are at an all-time low. My view is that since NBFCs have now been, exposed to a higher risk weightage from the Reserve Bank of India, a lot of banks are using their lending to NBFCs. So they will be forced to come back to the capital markets more and more, and that will lead to higher yields, because capital markets for NBFCs is shallower compared to the entire public sector and corporate bonds, because people have allocated amounts that they want to put into NBFCs. So as a result, I feel that NBFC spreads will move up faster than the other corporate bond spreads.
You talk about the clampdown on shadow lenders. I'm just wondering how that might impact their fundraising. Where are they turning to for capital?
So there's not really a clampdown, I would say. There is a higher risk weightage that the Reserve Bank has allocated, but there's no clampdown as such. They're getting money from banks. They're getting money from capital markets. They're also doing dollar bonds. They're doing a whole lot of PTC, securitization of their existing portfolio. These are the main sources of funding for them. So all these sources of funding will continue the way it is. It's just that I feel that the money that was coming to them from the banks in the form of loans may see a slowdown. It has already started seeing a slowdown. As a result, they will be coming back to the capital markets a lot more to raise bonds. They will try to do dollar bond issuances like we saw Shriram Transport do just a month back. They will also be doing a larger volume through securitization through the PTC route. They will sell their existing books. So that's the way they will generate capital.
Sujata, I want to talk about India's inclusion in the bond index. What impact might that have on domestic banks like Kotak?
So it's a very, very big event for our country. It's been on the works for some time. My feeling is because such a large amount of money is expected to come in, there will be bullishness and rally around the government bonds. And since all the prices are priced off the government bonds, you will see that the corporate bond yields will come down, which will have a positive impact on a lot of corporates. Even the NBFCs, like you said, they will also have some benefit from there. It is always welcome to have lower cost of capital. For a bank like Kotak, I think if our overall cost of funding will come down. So if you see the CD rates for the banks were very high till some time back, they have softened a bit with liquidity. As more liquidity comes into the market, the CD market will come down further. That will allow us to have a lower cost of funding, and we will also be able to lend at a lower cost to the market. So overall, that is always a good sign to have lower interest rates, because that spurs capital expenditure, that spurs project finance to have a softer interest rate. So from that perspective, we think it's a very, very positive step for us. Rupee also will stay supported, and that is also very good for us because we do import a lot of our oil needs. So rupee being stable it's a very good factor for us as an economy.
You talked about expecting a huge inflow. Can you quantify that? Some suggesting perhaps $25 billion. Is that close to your own estimate? What kind of inflows are we looking at in the next 12, 18 months?
So if you see already, then passive funds have started coming in. And yes, you're right about that number. Around 25 to 30 billion is the amount that is expected to come into the country post-July, and another 5 billion by the end of the quarter. So that's a huge amount of money. And if you see, we have typically had FPI flows coming in, but they have not been that high. But this kind of an amount coming into the market is going to be really positive for our bond yields. So we're expecting the G6 to track down from the current 710, 714 all the way down to 675 or so. And following suit, the corporate bond yields will also soften to that extent. While there may be a slight inch up in the spreads, especially in the longer end of the curve, because if you see our corporate bond curve is tilted downwards. So we feel that the longer end of the curve will not rally that much. Shorter end of the curve will rally a lot more, and you will have a upward sloping yield curve, both in government market as well as in corporate market.
Sujata, thank you so much for that. Sujata Guhata Kurta from Kotak Mahindra Bank. Now, let's give you the latest on the earthquake that hit Taiwan. This is, of course, the worst earthquake in 25 years for Taiwan. At least 56 people have been injured and some 26 buildings have collapsed. We know that Micron is evaluating operations. Of course, Micron is the largest foreign investor in Taiwan. Its output accounts for about 60% of the company's overall DRAM capacity. The likes of TSMC, UMC also evacuating some staff. Some of the operations have been stalled just as a preventative measure. Plenty more ahead. Keep it here with us. This is Bloomberg. Well, stocks and bonds have been under a lot of pressure as traders recalibrate expectations of that Fed rate hike cut, especially on the back of that better-than-expected data out of the U.S. We know that in terms of Treasury yields, they've been hitting the highest levels this year, topping the key level of 4.35 for the 10-year yields. In Asia, yields also moving in tandem. The likes of Australia, New Zealand, higher yields putting further pressure on stocks, of course. Take a look at where we are in terms of the two-year yield right now, 4.6930 at this point in time. We're also keeping an eye on Taiwan as well as the Chinese markets on the back of that earthquake, which we saw in Taiwan. Earthquake measuring 7.4 magnitude hitting Taiwan. At least 26 buildings have collapsed on the island. Tsunami warnings now downgraded along with China and the Taiwan coast. TSMC, by the way, has evacuated some stuff from production lines. The Taiwan dollar, the stock response had been pretty muted, as you can see on your screen. The Taiwan dollar at 32.04 versus the USD, pretty flat right now. And the TAIEX currently down 0.4%. In terms of the Chinese currency, the yuan, that's one currency we're tracking right now, 723.46 versus the USD. The PBOC has kept its fixing really, really strong. In fact, today's fixing was about 1,300 pips higher than estimated. In terms of futures, the A50 futures currently down by 0.4%. Overall, we're keeping an eye on the Fed, of course, and the data out of the U.S. That is it from Bloomberg Markets Asia. Daybreak Middle East and Africa is next. Keep it here with us. This is Bloomberg.